Okay, yes, welcome to yet another session for financial accounting. And today we are looking at manufacturing accounts and we are looking at November 2018. So the question is question 3. And let's just look at question 1 of this paper. Question 1 was asking us around a question. This question was, it had some question marks. It was the general questions that we usually have, where they ask us for P&L and financial position with additional information. And then the second question had a mix up of partnerships as well as also the manufacturing account statement. Down here, it asks us to prepare for home choice traders for their ended 31st December 2017, a manufacturing statement, and then a statement of P&L, 10 marks. So we are going to do this very fast. So it says Nambozo and Naku started a partnership trading home choice traders, manufacturing and selling household plastic items. They have been in business since 1st January 2016. Nambozo and Naku share profits in the ratio of 3:2, respectively. The following trial balance was prepared for the books of home choice traders as of 31st December 2017. So we have what we call capital accounts. So this is like their equity, okay? This is like equity, what somebody would call share capital and so on. So this is their capital. And usually for partners, it is distributed, okay? Just to be able to show how much each of the partners contributed towards the business. So the next one we have is inventory. In the same way as it is given to what we're trying to look at here, it's the same way it is given here. So we know which inventory to use in which place. This is November 2018. It's a paper in November 2018, and I've shared, for those that are following this through live, I've shared this question within the chat box. You can download it. Okay, so let's continue. So that's what we basically have. And then next we have sales, which we know will go to our P&L. We have a purchase of raw materials in the same way. And then we also have carriage of raw materials. This may seem to be new, but you know that carriage on raw materials works with purchase on raw materials, because carriage on raw materials increases the cost of your your purchases. Okay, so that is part there. And then we have plant and machinery at cost, which I said as soon as I see plant and machinery at cost, mine is to think about the accumulated depreciation that is associated. Okay, and then the depreciation methodology that I'll be given. Then we have land and factory premises at cost. Yeah, we know that land does not depreciate, but then we need when we separate the building from the land and factory, we shall depreciate the balance. So that's why they separate the 73. They give it to you so that you can determine how much are your factory premises, so that you can easily depreciate them, because land does not depreciate. Then we have factory motor vehicle, which was acquired 1st July 2017. Okay, and then we also have a factory furniture. Now, when they put dates here, mine is just to find out which books are we looking at. We are looking at books at the end of 31st December 2017. So ideally, whatever they are putting here, these assets were acquired midway within the year. Now, what this will also make me think about is their depreciation, to determine if this company uses full year's depreciation in the year of purchase and none in the year of disposal, or it uses the policy of time apportionment method. Now, when somebody's, okay, we have two policies that are usually adopted by the organizations. We have the one of charging full year's depreciation in the year of disposal, okay, in the year of purchase, and none in the year of disposal. That is one. And then the other is where we charge depreciation based on time apportionment. When I say time apportionment, means that if a motor vehicle was bought on 1st July 2017, when we are charging its depreciation, we basically charge for only 6 months up to the end of the year. So I'll be able to find that, and that should be able to be mentioned by the examiner somewhere, somehow, which is here. Okay, not this one. Let me just try to see if we have any comment that they have given. Usually the examiner will highlight it. If they don't highlight it, then we'll be able to try to think that maybe it's what? It is here. They have told us it is time apportioned. So it means that if you purchase an asset midway, then you need to calculate for its depreciation, taking into consideration how many months it has stayed there. Okay. Sometimes they will tell you none in there of this. They depreciate full year's depreciation. Now, when they say they depreciate full year's depreciation in the year of purchase and none in the year of disposal, means that even if they acquire this asset on 1st November 2021, it means that they will charge a full year's depreciation for this year. You get it? Even if it has stayed for 1 month, they will charge the full year's depreciation. That is the other policy. But this one, we shall charge based on the 6 months it has stayed. Then we have what we call the environmental impact assessment cost of 5,000. We have the sales returns of 1,670. We have advertising right here of 1,400. Then we have administrative staff salaries of 17,600. Okay. Now we know very well that sales return go hand in with sales. They basically reduce your sales. So when you're starting your P&L, you adjust with your sales return to get your net sales. Advertising, this falls under our selling and distribution costs. Administrative staff salaries, this one is definitely under your office and office and administration. This one is under selling and distribution. This is under office and administration. It's one of the it's one of the differences that we have when it comes to manufacturing. We classify expenses. Okay, we classify expenses. That's why even when they are giving you an allocation, they basically they try to bring in the sales, office, and so on. You get it? But in this case, I think they only gave us a distribution between office and factory, but sales would also be here. Okay, so we usually have 3 categories of expenses. So, and then we have our factory direct wages. This one will go in the manufacturing cost statement. Rent and lighting, you look out for the distribution and be able to know which one goes where. Manufacturing and trading license, this one is so much to do with the factory. And then insurance also, sometimes they distribute it as there. Provision for depreciation, this is the same word for accumulated depreciation, so it doesn't really need to confuse you. They have given you these figures. Remember, they had given us the cost values for each of the items. So yours is to find either you're going to use reducing balance based on the additional information or straight line. Then we have repairs of plant and machinery right there. Then we have trade receivables and payables right there and right here. Then we have discounts received on raw material purchases there. Okay, and then we have trade fair expenses, which are basically selling and administration. Then we have bank balance. In this case, the bank balance is on the debit side, so it's an asset. In case it's on the credit side, it will definitely be what? Be a liability. It will be a bank overdraft. So they give us additional information for inventory at the end of the year. We know how to use each of the values and where to put it. Then they also give us accrued expenses right there. And then they also give us apportionment of other expenses as provided to us. And then down here, they give us depreciation of non-current assets, type apportion like we saw, telling us motor vehicle is on cost. You know that this is accumulated, this is straight line depreciation method if they say on cost. Then we also have on reducing balance and so on. Okay. Now the next thing that we also need to go on and look at, they're telling us that manufacturing and trading license were paid 1st July 2017 for the period 1st that to that. 70% of the license is for manufacturing activities, while 30% relates to the trading activities. So this is also just a distribution, so you know how to apply each of each of the portions. It's agreed that no partner would receive interest on their capital contributions, no paid interest on drawings. This is so much common with partnerships where they have interest on drawings, interest on capital contribution, and so on, which is not here. So the examiner bringing in partnerships was just trying to make things look somehow complicated for you, but there's nothing much. This is a typical number on what? On a typical number on manufacturing. Okay, the partnership comes in very slightly. Then we're now going to draw our manufacturing statement right there. Okay, yeah, so that's how the question is. You can try to go through, but myself, I'll move directly to the question so that we are able to try this out very fast together at the end of the day. Okay, yeah. So Excel. And once you try out these questions, they become really friendly to you. Okay, they become very, very friendly to you. So we are going to start with the manufacturing statement that has been asked. In most cases, yes, they will first do the manufacturing statement, okay? Because there's a figure that we pick that we take to our statement of P&L. So, okay, that is what we basically have right there. So we can have amounts in thousands, in UJEX, thousands in each of the columns. So I'm just trying to do some organizing of my work. Now, of course, manufacturing statement, just like the way we have, let's say, just here, it is usually for the year ended 31st December 2017. So I'll not forget to include that. For the year ended, part of my heading right there. Now, what is the importance of a manufacturing statement? A manufacturing statement basically helps us to determine how much was the cost of production. That is what a manufacturing statement basically helps us to, okay? It basically helps us to determine what was basically the cost of production. Now, what that means is we are going to accumulate all the costs that relate to the production, okay? Now, when you're producing, we have certain things that we spend on. We spend on the raw materials, we spend on labor, and then we spend on other expenses, which in this question we shall call factory overheads, okay? Other expenses. So the key things is the raw materials, and then the labor, and then the other expenses. Then we're able to accumulate those together, look at the work in progress, and then we're able to get what we call the cost of goods fully manufactured, okay? As simple as that. So we are going to see how that plays out from our here. So now that we are trying out now this question, like I said, we first look at the raw materials, okay? We first look at the raw materials. Now, raw materials. So we want to basically determine how much we have spent on the raw materials, okay? Now, for us to start on the raw materials, the first thing that we need to look at, remember the same way we do for cost of sales. When we are doing cost of sales, now here we are trying to determine like cost of raw materials. Now, when we're doing cost of sales, what we do is we do opening stock, and then we add purchases. We add purchases and less closing stock. Then this is what we do. That is what we basically do when we are determining our what? Our cost of sales. And usually what happens also, in case we have any adjustments on, let's say, purchases, okay? We usually have those adjustments. Now, purchases, we know very well that purchases usually have adjustments like add carriage inwards. In cases where we have, let's say, apart from carriage inwards, we can also have returns. In case you have purchase returns, which are usually return outwards, then you actually adjust them right there, okay? One of the other adjustments that we can have, let's say here, sometimes that can be maybe brought in, okay? Maybe could be, let's say, sometimes discounts are brought in here. But before that, I want to say that as this is cost of sales, in the same way, if you want to determine how much you spent on raw materials, you would use the same thing, okay? So what this means is that wherever there is stock, where there is opening stock, we shall have opening stock of raw materials. And where there is purchases, we shall have add purchases of raw materials. And where carriage inwards, there will be carriage inwards of raw materials, like that. So that is basically the simple way. And the same thing will proceed. Even this to be closing stock of raw materials. That is basically what we actually bring and put down here. That is what we basically do here when we are determining our cost of raw materials, okay? So that is what we basically do. So this is basically, you can call it cost of raw material. At the end of the day, that is what we are trying to aim at. I just wanted to demonstrate it for you so that you're able to understand and conceptualize it. Because I know you know the cost of sales, but you may be challenged with this. So what I'm going to basically do is I'm now going to look for my opening stock of raw materials. Now, in most cases, this opening stock of raw materials is given by the examiner. So when you come up here, we had our opening stock of raw materials. And what did they give us? They gave us 152. So I'll just pick the 152 and is what I'll bring to put here, okay? So let's say maybe I may choose to put it, let's say, in the last column. Okay, maybe in this column, we put it here. So I'll put the 152 right there, okay? As my opening stock of raw materials, let me put it under this row. Then the next thing that I'll aim at is to go and get my purchases, okay? Because at the end of the day, I have to add my purchases. So I'll go and look for my purchases of raw materials. The purchases of raw materials is right here. So I'll just pick the value and take it there. As simple as that. So you've now started earning marks on this question. You add your purchases of raw materials. Now, in case there are any adjustments on my on purchases, I'll look out for these two, okay? And then also maybe in case I have a discount, then I'll be able to highlight that. So when I come here, just under purchases, there is carriage on raw materials. These are actually carriage is logistics, basically expenses that you incur in terms of transport of bringing your raw materials. So they are part of the value of your raw materials. And that is why we add them when we are trying to look at the cost of our raw materials. So I'll just come here and record and put that 52 there, the 732 there. Okay, I hope you're following. Now, the next thing that I'll look at as well, okay, right here, the next thing I'm going to look at is the aspect of to see, do I have anything to do with, let's say, maybe returns or discounts. So let's try to see if there are any returns. Down, we only have sales returns here. Let's go down. We don't see anything. We have something here, which is discounts on raw material purchased. Now, discounts on raw materials purchased, these are discounts received, okay? They reduce how much our raw materials cost. The discounts received reduce on how much our raw materials cost. So when we are trying to draw up our what? Our manufacturing cost statement, we have to come and reduce them. So instead of here, since I don't have this, I'll put less discounts received on raw materials, which I'll put here. Sorry, pick the whole figure. It is 7,800. So this is a less. I'm going to less it. So I'm going to put it as a negative right there. Okay. So that is what I basically have when it comes to around purchases of raw materials. Now, the next thing that I'm now going to do, okay, I'm now going to less my what? I'm going to less my closing stock of raw materials. Let me even reduce this space, okay? And what I'll do is I'll move onto my question and look for closing stock of raw materials. So closing stock of raw materials right here. Additional information as of 31st December does that raw materials is 80,000. So that is the closing stock of raw materials. As you can see, we have different categories of raw materials, but my interest is only in the closing stock of the raw materials, which is the 80,000, which I'll take the other side. So I'll just come here and include this here. And remember, it is a less also, okay? It's basically a less of that. So at the end of the day, I'm able to now add all these together, okay? To determine what will be my cost of raw materials, okay? Yeah, sometimes you can separate this and put it in this column, okay? And then whatever you get here, you're able to add it here, because this is your opening stock, then add purchases and so on. You can now be able to make adjustments right here, or let this amount be here, and then the adjustment of purchases after you lessing up all these gives you that, then less that will now give you your cost of raw materials, which is basically, I'll just add up since I've already put the signs, which is that. So it gives you 58,468. That is your cost of raw material, okay? So the next thing that we are going to look at is labor, okay? Remember, we said that we look at raw materials, we look at labor, and then we look at other kind of factory overheads, okay? So we're now going to look at the cost of labor. We're going to look at the cost of labor. So now when we are looking at labor, definitely labor, we are looking at labor that is used in production, okay? We are looking at labor that is used in production. Now, I want you to look critically here. When you go back this information, use it to look for anything that is around labor in terms of wages, because the return on labor is wages. So look around and see, do you see anything on labor for the factory, okay? Labor, not the salaries. The salaries are usually for the general staff, but usually for labor, they usually call it wages in most cases. So do we see this line? This line of factory direct wages of 16,800. I hope you can see it, you can all see it. That is the first line of factory direct wages that they have showed us. Now ours is to check out and see if there is any additional information on this 16,800. So when you move down here, you actually realize that under accrued expenses, we have factory direct wages of 2,000. Now what this means, if you have a figure under here, as we saw, we had a 16, it is right here, 16,800, and then you have something under accrued expenses. It means that this 16,800 is what was cleared, okay? Now, what is accrued are those expenses that were not paid at the end of the year, but they relate to this financial year. So what we shall do is we shall add both of them. Remember, for accrued expenses, we add with what is with the trial balance. If it was a prepaid, we would less it. So it means that when I'm going to do my, when I'm going to take this within my what? Here, I'll put factory direct wages, and what I'll basically do is I'll come and add up. Okay, now I have the 16,800 plus what was in the accrued what? The 16,800 plus the value that we had in the accrued, which was 2,000. So that is what I'll basically add. So I'll add 2,000 right there. So this, let me just try to pick it and put it here. Gets me to 18,800. It is 18,800. So that is what I basically do have. Now, when I go back to my question, mine is just to look out and see if that is all about labor and raw materials. And then the next thing that I'll also check out and see, do I have any other direct expenses? Because those are the direct expenses. We sometimes call them prime costs, okay? Those are the direct expenses that I have at hand, or prime costs. So if there's none else that is there, I'll basically just add up my what? My direct, the cost of raw materials and then cost of labor to get what I'll call my prime costs, okay? Sometimes we call them the direct costs. So when you sum up this and this, basically gets you at 603,438. So that is your prime cost. It's basically looks at only direct costs. So the next thing that I'm going to basically now do, I'm going to look at other costs, which I'll call the factory overhead. So I'll just record here and say factory overheads. Factory overheads right there, okay? So under my factory overheads, I'll now go back to my what? My question. Now, anything that has a factory expense will be a factory overhead. So as we look here, not yet. Now, when we get here, of course, here has a depreciation to do with what? To do with the factory premises, to do with the factory motor vehicle and so on. But let me first leave depreciation since I need to calculate it. Let me first get the low hanging marks that I need to use, okay? Now, as you can see, when you get down here, sales returns, advertising, this one we have already recorded it. Then we have rent and lighting and so on. Okay, we have repairs of plant and machinery right there, discounts and so on. Okay, so we have different of them, but at least each of them has a calculation towards it. Okay, apart from what I see, these repairs of plant and machinery, this one doesn't have a calculation. Now, plant and machinery, why I'm putting it under factory is because what's the use of plant and machinery in a manufacturing company? It's basically for the factory. So it's an expense that relates to the factory. So I'll just come to here and put my plant and machinery, and I'll pick the figure and I'll record it. Let me record it here so that I can be able to record the total in here. Okay. So the next thing that I'm going to now look at, now I'm going to go back and check to see what other expense now can I start with. Okay. Now I may not have any option but to actually start from the beginning. So the first expense I'm going to look at is the depreciation of this factory premise. Okay. So they are telling me that this factory premise is of how much? Is of 153,380. But okay, in total, that's land and factory, but land costs 73. So what I need to do is to find how much basically relates to what? To only the factory premise cost, and I find its depreciation. So now that gets me to my first working. So I'll just say, this is my working. I'll put, I'll just do a tab. And these workings are also very important. The examiner is always looking out for them, just to make sure that they understand. So this is what they have. So I want just to get, of course, the total amount. The total is 153. Let's try to get this. The total is this. Let me just try to add the 3 zeros. So total is 153,380,000, and then the land is 73. So this is what land is, about 73. So when I want to get the difference between this minus this, it gives me 80 million. So the factory premise cost is actually 80 million. That is what I basically have. This is my working one. So why I needed this is because I want to calculate the depreciation. Okay. So depreciation is my next attempt for this. So the next thing that I will do is go back to the question and find out what is the depreciation. I'm going to find out how do I depreciate plant and machine, no, factory. I'm still on the factory premises. So this is what the guy says. Factory premises are depreciated at 8% reducing balance method. 8% reducing balance method. So I'll pick my percentage, which is 8%. But you know, they have told me it's at reducing balance method. If it's a reducing balance method, it means I have to first find the net book value. Okay. I have to first find the net book value because depreciation on reducing balance is basically given by, we basically have, we usually have, of course, the percentage of depreciation multiplied by the net book value or carrying amount. The two terms are the same, net book value. So this would mean that we are going to have, 8% times the net book value will be the 80 million, which is this, as you can see. Then we are now going to remove the accumulated depreciation at the start of the period. So when you come to this question, ours is to go back up and see which is our accumulated depreciation for this factory premises. So do we see the 6,400? This is the 6.4 million, so which I'll bring here. So this 6.4, I'll put it here. I'll just add the 3 zeros since these ones are 3 zeros. Oh, I've added more than that. Okay, right there. So that's what I have. 8% times 80 million, okay? Times 80 million minus 6.4. That is as it is, okay? You should be able to know how to calculate that. So that gives me 588. Let me just put this. It is 588830. So ideally, if I'm taking this into my what, I'll come here and say depreciation of factory premise. I hope you're also writing these things on your side so you don't forget. Okay. So this depreciation is this value. I'll just come and paste it here, paste values. I remove the 3 zeros. So it's we're able to get a right figure there. So you can see 588 because there's a degree of precision there. And then I'll direct my examiner and I'll say, please check out working 1 in case you want to know more details. Okay. So the next thing that I'll do is I'll come back now to still the question and look at the next factory to do expense. So the next thing they tell me is land and factory premises. Okay, which we have done. The next thing is factory vehicle, motor vehicle, which was bought on it was bought on 1st July 2017. And remember, our books of accounts here are up to December 2017. So ideally, I need to be able to calculate. My depreciation as well. So I'll come here and say working 2. My working 2, I'm going to have the so-called motor vehicle. So this is its cost. So motor vehicle cost is this value. Let me add the 3 zeros. 1, 2, 3, right there. So I'm now going to check out its depreciation. Depreciation. You can see the calculating depreciation is the same across whatever topic you're working with. So they tell me that motor vehicles are depreciated on cost 10%. So I just multiply that by 10%. But before I do that, I'll take the 10%. I also want you to observe this. They're telling me that depreciation is as time apportioned. It is 10% on cost. So what this means is that I need to also look at when was this asset bought? This asset was bought on 1st July 2017. So ideally, it has been there for 6 months from July to December when you count. Those are 6 months. So when I come to here, I'll say depreciation. Remember, they have told me this is 10%. So ideally, and duration, this has been here for 6 months. So if I want to get now the actual depreciation, the value of depreciation, it will be basically equal to cost, which is this, times the depreciation, which is 10%. Okay. Of course, this is the annual depreciation. This is the annual depreciation. And if I want only for 6 months, if I only want the depreciation for 6 months, it will now be this value that I have gotten here multiplied by 6 divided by 12, multiplied by a half, which is the year, which gets me to 1425. That is what I basically have. Now I want you to look critically here. The reason why I have done all this is because of what the question dictated me to do. When you come down here, it tells me that depreciation of non-current assets is time apportioned. So it means that if I acquired an asset midway the year, I can't consider the full year's depreciation. Okay, you need to understand that. And like I said, that sometimes the examiner may give you this policy. Sometimes they will tell you that the company depreciates its assets full in the year of purchase and none in the year of disposal. Now, in that case, I would have taken what? I would have directly taken this depreciation of 2.2850. But since this time portion, I have to multiply it by only 6 months portion that this asset was in place. So that's why I've done this. So after I've done that, I'll just now come and put my depreciation factory and pick the amount. So I'll come here and put the amount there. Of course, I'll remove the 3 zeros. Okay, so it becomes 142. I'll just come and put my narration here. Allow me to copy. So that is depreciation. Depreciation. So the depreciation of factory motor vehicle, that is what we basically have there. 1425. So I'll go back and check out and see what one is my next thing, what relates to the factory alone. Other things I'll come back later on. The next thing I'll do, furnitures and fittings, same story. Furnitures and fittings, same story. Furnitures and fittings was acquired also 1st July 2017. So I would also come here. This is working 3. This is working 2. This is working 2. I also come here. This is question. This is question 3. Okay. I'll say this is factory. So basically, this is the cost. This is the cost. And then what I'll basically do is I'll get my depreciation. I'm going to get my depreciation method from my additional information. Furnitures and fittings, I want to see how they are depreciated. Now, furnitures and fittings are also depreciated on cost, which is very good news. Which is very, very good news. So this is 5%. So what this means with depreciation, it means that, and this one has also been here for 6 months. You don't need to forget, okay? So it means that if I'm calculating depreciation, it will also be, this times 5% times 6 divided by 12, which gives me to 210. It gives me to 210, okay? That is what my working 3. At least I know that you understand that, even if I've done it very quickly, okay? I know you understand it very, very well. So furniture and fittings, depreciation for furniture and okay, factory furniture and fittings right there. By the way, you need to know that if at all these were, if up here it didn't have the word factory on it, I would not be looking at it here. I would wait when I'm doing the P and L, that is when I'll put it there. Okay, but since it has factory, that's why I'm including it within my cost of. Remember, the reason why I'm including it here is because depreciation is part of the costs that you incur in order to produce that finished good. So you need to be able to add it under your manufacturing cost statement. Any other depreciation will go to our P and L. Okay, so you need to basically understand that. So I've looked at the depreciation of the 3 items. The next thing that I'm going to do, I'm going to come here, sales return, administrative stuff. I'm now going to distribute these ones. The next thing is rent and lighting. Remember what they told me about rent and lighting? They told me that rent and lighting has something here. It is 80% factory. Okay, so that's the next thing that I'm going to look at. So I will come here and I say rent and lighting. Now this rent and lighting has some working on it, and I want you to be very attentive here. Okay, now this same rent and lighting, when you come here, we have a value within our trial balance. So our trial balance says that rent and lighting, where are you? Here, is 28,600. Rent and lighting is 28,600. But when you also come to the additional information under our accrued expenses, they tell us that there's a rent and lighting of how much? Of 1,500. So it means that whatever is in the trial balance is what was paid. What is accrued is what was pending by the year end, unpaid. So you have to add the two figures together. That is the first thing that you need to do to determine what is your total rent and lighting for the year. You add the two together. That is the first thing that we shall do. So let me just try to use this small space so that I'm able to do that. So I'll have my 28 at that, and I'll add 1,500. Now adding these two together gives us what would be our rent, okay? Basically gives us what would be our rent for the period, which let me just try to get maybe a side here. Just try to get this, add it together. So it's about 3,100. Now, after we have gotten the rent for the year, I want you to also be very attentive here. The next thing that we are going to do is we are going to apportion now. That 3,100 that we have gotten, which is an addition of this plus what is in the trial balance, has to be distributed. And 80% goes to factory. The reason why the examiner puts this question mark here is just for you to know how to calculate the balance. If this is 80%, this should be 20% for the percentage to get to 100. The same thing with insurance here. If this is a quarter, then this should be 3 out of 4. That is as simple as that, simple mathematics. Because at the end of the day, the overall expense has to be distributed. So if this is 80%, this is 20%. If this is a quarter, then this is 3 out of 4. In case you don't understand that, you need to highlight that. So I'm going to now to distribute. I'm going to get my lighting and get 80% of the total and give it to this factory. So when I come here on my working, you've seen I've added these two together and I've come to this. So it means that if I want to only look at this, I'm going to multiply this by 80%. Okay, I believe that we are together. So 80% of the total, 80% will be 0.8 times the total, which is 3,100. Gets me to 24,080. 24,080, that is for lighting. That is what I have gotten right there. I didn't want to take it to the working, okay? If you don't want to have many workings here, because here it may take a lot of my time, I just worked it here. The examiner can easily know how I derived to 24,080, and that is enough for them. So I'll come back to my question and see what else I have to record. So I've recorded rent and lighting. So the next thing I'm going to do is manufacturing and trading. So manufacturing and trading, they have told me that it is 10,000. Now, but it also has an additional information right here. They're telling me that manufacturing and trading licenses were paid on 1st July 2017 for the period of 1st July 2017 to 30th June 2018. Now, I want you to open your eyes onto this. It means that whatever we are seeing here, this manufacturing and trading here, up, let's move up. This is not all for this year. Actually, a half of it relates to next year because it was paid starting 1st July 2017 to 30th June. So part of it is prepaid. It's a prepayment. And prepayments are not supposed to be included within our P&L. We have to reduce them, okay? So we have to get that 10,000 and divide it by 2 so that we get a portion that starts from 1st July 2017 to 31st December 2017, which is the financial year that we are looking at. Then the balance that starts from 1st January 2018 to 30th June 2018, we shall record it as a prepayment within our balance sheet or statement of financial position. So that's the first thing that we need to first hold our hands to. Now, the next thing the examiner goes and says is 70% of the licenses is for manufacturing activities, while 30% relates to trading activities. So it means that for the factory overheads, we are only going to charge 70%. The other 30% will go under our selling and administration kind of selling and distribution expenses. Okay, so that is what I'm going to basically do. So when it comes to here, when I'm looking at my manufacturing and trading, when it comes to there, let me just pick this text for you. When you come here, the manufacturing and trading, okay, what I'm going to basically do, let me also work it out from here. So I'm going to get 10,000 divide, okay, 10,000 divided by 2, okay? And you know why I'm dividing by 2? Because it was paid for the whole year, but now I'm now getting a portion that relates to the 6 months of this year. So divide it by 2, okay? Or what you can basically do to even show the examiner much more is multiply it by what? By 6 out of 12. So that the examiner knows exactly what you're doing. 6 months for the year. And then what you basically next that you're going to do is you're going to multiply this by 70%. Because 70% of what you have gotten for this year relates to basically factory. Okay, so that is what we are basically going to do. So this is as simple as 50,000 multiplied by 0.7, which gets me to 35,000. Gets me 35,000. I may hope I use the right figure. This is 50. This is 5,000. Sorry, it's 5,000. Because half of 10,000 is 5,000. So it's 5,000 times 0.7, which is 70% to give you that value. So that's what we have. So I hope we are moving on together. Okay. Yep. So good progress. We move back here. Plant and machinery. Work, we are done with this here. Let's do insurance. Let's see insurance and see if insurance is broken down also. Insurance, yes. So insurance, these guys have told us that for office is 1/4. I told you how to calculate for factory, just get to 1 minus 1/4. Because at the end of the day, when you add what is in the factory and the office should get you to 1 as a whole sum figure. So here is 3/4. Factory is 3/4. So the insurance figure that I have here, as you can see, the 7,900 for insurance, they are telling me that 3 out of 4 relates to the factory. There is no additional information onto that. I think even when I get down, I don't see anything. So what I will basically do is once I come here, I'll come and put my insurance, get this 7,900 in bracket, and I'll say I'll multiply this by 3 out of 4. I hope everyone knows how we got the 3 out of 4, and that's how you would calculate it in the exam. In case they give you more than one, if they also give you something on sales, then you also find ways of how to manage it. So at the end of the day, we actually get 5,925. That is what we have for insurance. Okay, yeah. So I hope that is okay. And that should be okay, I believe. So we are done with insurance. We're done with insurance. Then we'll come to provision for depreciation. These ones we have already used, these figures, premises. This one we have already recorded it. This one we shall record it in the P&L. This one we have also recorded it already. Trade fair expenses, not good at this point in time. Look at our additional information and see if there's anything we have left out. These ones we have utilized this information, utilized it. We have also come here and utilized this information as well. We have used it, Yes, we have used this. I think what we did. Do we have anything that we don't use? I don't see as yet. This one we have used it. This one does not apply to what we are doing now. This one also does not apply to what we are doing right now. 10% of the net profits before apportionment partners would be retained for acquisition of a new plant and machinery. This one also does not really relate so much on what we have. Okay, so yours is to see what you basically have there and here, and then that would give you a good indication, okay, of what to basically do. Does anyone see anything that we have left out? Did we let me just find out, did we depreciate plant and machinery? I think we haven't depreciated plant and machinery. When you try to look back to our, when you try to look back into our working here, we had only factory premise, we had only this and this. So let's depreciate our plant and machinery as well, because it also part, as I think here we only recorded repair of plant and machinery, but the plant and machinery also needs to be depreciated. Plant and machinery. Now, how do we depreciate plant and machinery? Let's come back here. So plant and machinery, they gave us this cost. This is the cost. And then the accumulated depreciation is here. Like I said, provision for depreciation is also accumulated depreciation, which is 2,200. And then let's just see which method. Plant and machinery is on reducing balance. Okay. So let me just try to do a small working for it so that we're able to get this through. So I'll just come here and put this as my working for. So this is plant and machinery, reducing balance. So we have cost, we have accumulated depreciation, which they are calling provision for depreciation, and then I'll be able to get my net book value. Okay, so that is what I'm going to basically do. So I'll just come here and get this 1,100, bring it here, and then get my accumulated depreciation, which is down here, 20 this. So get the difference, gets me to that. Then my depreciation, they have told me that this is equal to 5%. I hope so. When you come here, no, this is a different question. Sorry, this is the one. So it's 20% reducing balance. Okay. So just come here. It's a 20%. So this means that this 20% would mean that I'm going to get 20% and multiply it by what? By my net book value, which I've gotten as 8,800. Okay. I hope you're seeing that, which gives me 16,160. And this one has stayed for there, so I don't have to time apportion it in any way. Okay. So I'll just pick this and bring it here. I'll just pick that and bring it here, which gets me to 16,160. Are we together? I hope we are together. Yeah, we are very together, because this one is already has no 3 zeros, so it's right. Okay, these amounts are in thousands, so you know. And even when I'm directing the examiner, I'll tell this is working for. Is working for. I think this was working 3. I didn't want to miss it. That is working 3. So mine is just to confirm that I have not left out anything. Okay, I have not left out anything at all from my question that relates to the factory. Okay, and you can be able to look at your question in detail. Okay, so at least you can see we've been able to conceptualize everything. So if that is okay, yours is now to go back to calculate now. Now what we are going to calculate is we're now going to basically be able to add our factory overhead with what we got as our prime cost, which is this. Okay, so basically total factory overhead is basically this, the summation of all this, which gets me to 62. That then when I can sum up all these two and get 665 626. Okay, so after you're done with your factory overheads, do you know the next thing that we look at when it comes to manufacturing accounts? We look at the changes in working capital. It's basically not changes in working capital. We call it changes in work in progress. Okay, changes in work in progress. Then what we mean by that, we are going to look at we are going to say add opening work in progress, and we are going to less closing work in progress. We are basically getting how our work in progress has changed within the period. Okay, now in most cases the examiner will give you this. That sometimes is called YWP. So what this means is that when you come your question right here, when you go up here, I want you to look critically. So we have the opening work in progress, which is 152, which is for raw materials. Then work in progress is 68 here. So I'll pick the 68 and take it to right here. My opening work in progress is that. I'll add it. It is 68. Somebody says, is the 665 the production cost? No, we have not yet gotten to the production costs. Okay, we have not yet. You're saying what? Do you mean what is the name given to that? Is that what you're trying to? I don't know if it's what you're trying to ask. Okay, but we have not yet gotten to the cost of goods fully manufactured. Okay, yeah, we've not yet gotten to the cost of goods fully manufactured. That's why we are trying to keep on adding what? Keep on adding more information right there. So the next thing that we are going to look at is now back to our question, is look at our closing work in progress, which is the closing work in progress. It was given here, which is 44,000. It is 44,000. We come here, but for it we are lessing. Okay, you get the principle. So from that, you can be able to get what you would call your cost of goods fully manufactured. You can get what is your goods fully manufactured. So it will be a summation of this. which gives us 60. It gives us 689,626. That is what we basically get right there. And that is our last figure here. Now, sometimes there is what we call goods transferred at what? Goods transferred, the goods can be transferred at a markup, okay? Just in case you're able to find something like that, you know very well that there's what we call it factory profit. Sometimes instead of transferring goods at cost, because now that is the cost, that is like the cost. So sometimes they want to determine and compare it with, just in case we were getting these, let's say, what would I say? Just in case we were getting these goods from a competitor or another manufacturer, how much would these goods cost us? So they go ahead to add up a markup on that, okay? So, but for matters of this, you may not really, for this question, there's nothing really that came up of that kind, okay? But just in case it comes up, you can be able to see how to transfer. I would encourage you to look out for the notes. Look out for the notes. There are some notes that I shared with you that have something to do with what? With manufacturing accounts. So that will help you to conceptualize and understand how manufacturing accounts work, okay? Just in addition to what we are basically doing here, you can be able to use those notes to help you accordingly. But for this question, you didn't have. So we shall end there for matters of this question, okay? And just draw the next P and L. So that is what we do. Let me just try to copy this so that I simplify my work here. So I'll have my P and L. So I'll call this profit and loss. Profit and loss account. So after the profit and when we're trying to draw up our profit and loss, we draw it in the same way, okay? We know very well that when you're drawing up our profit and loss, the first thing that we write is our sales, okay? We write our sales. So I'll basically just have similar headings, and then I'll just copy some figures here. What I recorded up here, and I'll put it there. And the next thing that I'll have is my sales revenue. So I'll start with sales revenue. The normal P and L that you know. We are just going to see how that changes. So sales revenue, when you come to your question, let's go up and see where sales revenue is. Am I in the right thing? I'm here, yes. So this was my sales revenue. It was 852. So I'll just pick my sales revenue. I come here and record it. Let me record it here because it has an adjustment. So sales revenue can have an adjustment of a sales return, which we have here, and sales returns are supposed to be deducted from our sales revenue. So we have sales returns. Sales returns can also be called return inwards. Okay, so in case you see them in any trial balance, then when you're doing your P and L, you have to adjust. So less sales returns. Less sales returns. So sales returns is that. Then you're able to get what you call your net sales or your net sales revenue, depending on what you're trying to put. So the difference between the two figures would give you your net sales, which is 1,850,330. Okay, that is what we basically do have. I hope we are following, and I hope up to there we are all fine. So after you've gotten your net sales, the next thing that you need to go back to is to check out and see the figures that are going to help you when you're doing your cost of sales. Because we know that after sales, the next thing we're going to do is less cost of sales, okay? So cost of sales, we are first going to do, we're going to use this information, this opening stock of finished goods, okay? Because we know that when we are doing cost of sales, I think this is what we do. Because we shall come here and say less cost of sales. So you have your, the first thing that you do is you have opening stock of finished goods. That is the first thing we do with the cost of sales. Remember, this cost of sales here, did I leave this? I didn't leave it. The normal cost of sales, we do opening stock, add purchases, and less closing stock. But since now we already have dealt with the raw materials and work in progress in this account app, down here we only look at the finished goods. So what you basically do is opening stock of finished goods. You just ask yourself, how much do I basically have for opening stock of finished goods? So I'll go back here and get my opening stock of finished goods, which is 144, because it's one at the first that. So that is what I'll basically put there. Let me put it under here. Okay, let me calculate it under here. So that is what I have. Then I'll add. Now, the next thing that we'll add is would be purchases, in case we're dealing in a kind of like we purchase goods and resell them without manufacturing. But since we now do manufacture our goods, where we should have put purchases, we put this cost of goods fully manufactured. Okay? And this is where now this figure comes in. So instead of adding purchases, we add cost of goods fully manufactured. And what we shall basically do is we shall get the figure as it is there and bring it down here. So we shall bring it here and put it here. That is what we basically do when it comes to goods fully manufactured. Okay, 689626. That is what we do. After that, after we have done that, the next thing that we are going to look at, remember when we are doing our cost of sales, after that, we less our what? We less our closing stock. So yours is to look for your closing stock, where it is usually in additional information. So down here, we have our additional information that have given us stock at 31st December 2017. So our finished goods is 128. So I'll come and put here 128. So remember, I'm lessing this, less closing stock of finished goods. So I'm going to put a negative to this, okay? So it's going to give me my cost of sales, okay? So my cost of sales would definitely be, since I'm using Excel, allow me to do that. So I'll get my 705 and the difference between sales, net sales and cost of sales will give me my gross profit. Will give me my gross profit. It can be a gross loss as well, but since that is what I have, so it will be this minus this, give me 144,704, as you can see there, okay? So after I've done that, I'll now get into my other operating expenses. So I'll say other operating expenses, okay? So other operating expenses, now I'm going to include what? I'm going to include Now in manufacturing, we break down, okay? We usually have what we call the office and administration expenses. So let me start with the office and administration expenses, okay? And I want you to open your eyes critically so we can pick these together. So I'll go back to up to see each of my expenses that fall under this category. So these ones, I already utilized them all through. Now we have this inventory impact assessment, as we can see it right there. And then we have sales returns, advertising. Do you see this? Administrative staff salaries. This one would follow under what I'm trying to look at. Okay. So you copy it and you're able to take it to your administration expenses. So I'll just come here and include it here. And just pick the value. Let me just first work in, let me work in this column. Okay. So the next thing that I'll do is also I'll look at for any other that I have in here. These ones I've already recorded them. Then we have rent and lighting. Okay. I'm going to do rent and lighting. Now, rent and lighting had, the reason why I'm taking it is it had an additional information here. You saw this where they said office has the 20%. So the same way I did for factories, the same principle I'll use. So I'll just come here and say rent and lighting. Let me just try to see what I did when it came to here. I multiplied by 80%. When it comes to the other side, I'll multiply by 20%. So I'll just come here and multiply this by 20%. So I'll come here. Okay, I don't know if this will give me what I'm looking for. Let's see. Okay. Let's try to use some Excel here. So it gets me to 426. That is what I'm able to get. I'm able to get about. I hope that is the right kind of. Let me try to calculate it aside, so that it doesn't disturb me much. I'm worried that I may have gotten a wrong figure. This is 28,600. You can also calculate it on your calculator and see what it gives you. Summation of this. Summation is bracket. Gets you that. Then let's do 20% of this. 0.2. 0.2 of this actually gets you to 6020. So that's what I'm supposed to have here. The other one was a bit a weird value. So that's why I had to recalculate it. So that is all when it comes to the rent and lighting. So the next thing that I'll do is I'll come and look at this one, manufacturing and trade. This one, the balance, I'll put it under selling and administration. Insurance had, did it have a distribution? Yes, 1/4 is for office. So insurance is one of the costs. So I'll just come to here, insurance, and I'll come and see what I did on insurance. This is what I did. So I'll just come and multiply that by 1/4 instead of 3/4. So it means that for insurance, this would be times 1/4. So what that means is, it means that will be what I'll be doing. It gets me to 1975. 1975 for insurance. Okay. So that is, we are good to go. Mine is now to move back and see what other costs to look at. Depreciation, office and administration didn't have any assets to depreciate, but in case it had, I would depreciate. I don't have anything here. Yeah, I think I've been exhausted when it comes to the administration expenses. At least I had the staff, the insurance, and the lighting. Okay. I think what I'll basically move to is my selling and administration expenses. Okay. So this is my total. You can put the word or you can put it here. So I'll move to my selling and the distribution expenses. So the selling and distribution expenses, definitely what I'll basically do is I'll still come here and look for them. Okay. Environmental impact assessment. This one I'll classify it there. Okay. I'll classify, since it's so much to do with sales. It's an indirect cost of sales. Okay. So I'll put it under this category. You're trying to see how the things you sell, what that it will affect. Okay. And then the next thing that I'll also do is I'll come to my advertising and I'll also put it there. As direct doesn't have any distribution I have. So advertising, this is 1,400. Sorry, supposed to put it there. So that's what we have for advertising. Okay. Now we also need to check out and see what other do we have. When you come here, we have those ones we have done. So there's this direct one here. Trade fair expenses. Remember, trade fair expenses are also around distribution. So I'll pick my trade fair and bring them here. Which is 4,000. Okay. Which is 4,000. Now mine is to look and see, is there any other expense that I need to include? Okay. Is there any other? You remember something that was to do with this manufacturing and trading license? The manufacturing and trading license, that would also maybe I'll classify it under sales. Okay. So manufacturing and trading, I'll go back, it was 10,000. And then they told me something here. Told me 70% is for manufacturing, well, 30% relates for trading activities. Okay. So 30% is what I'm going to charge to selling and administration, selling and distribution. So I'll come here and just copy that, what I had up here. I'll just copy that and bring it down here. So remember, they told us that part of it was for next year, which was the 6/12. Instead of multiplying here, I'll multiply it by 30%. So this means that this will be basically 5,000 times 30%, which is 0.3, which will get me to 1,500. Okay, I hope that is clear for you. Then after that, what I'll do, of course, since this they have already told me that already the other one was manufacturing, I'll call just these trading licenses. Okay, it's just trading license. So I'll come back here and see what else do I have that I might have left out. Okay, at least I've been able to include all these. Since the selling and administration is the last expense, at least I need to be able to include all expenses that I might have left out. At least I have. Okay. Yeah. So I'm trying to make assumption that I have included everything. So let me get the summation of this. Okay. This gets me to 37. 37, and then when you add, it gets me to about like something like maybe about like 63 around there. I don't know if you able to get something like that, but that should be able to give you, yeah, some kind of picture. And then at the end of the day, remember what we are doing is we are first getting profit, okay? And since this has partnership in it, the first profit, you're first getting what the profit we call the net profit before appropriation, okay? So let's see how our total would look like. The total other operating expenses, which is the summation of what? Of this, which gets us, it's about 63,090, okay? That is what we basically do have there. I hope we have written everything. Was this, this is 17,600, okay? That is okay. And then right there, this is, this is adding up everything. This should only add up from environmental assessment, which is 53. It should add up here. It should basically add up there. The 37 should actually be the total. So total here, subtracted from that, we shall get what we call a net profit before appropriation. What that means is that that is your net profit before you have distributed the profits, okay? It is what it's before distribution of profits to the partners. Now, if we didn't have anything to do with partners, would end here. If this didn't have any component of partnerships. So the only thing that we are going to do down here is now what relates to partnerships, okay? Now, and the next thing that we are going to do here is an appropriation statement, okay? It's a profit appropriation statement. So what we do with, after we have gotten the net profit before appropriation, when we are adjusting it, when it comes to partnerships, we basically have certain things we add, and then we have certain things we remove, okay? Now, in this case, since they have given us something to do with salaries of the partners, we now bring them here. So they have told us that it was agreed that Nambozo and Naku would receive a monthly salary of 600 and 500. 600. So partners' salaries are supposed to be included within the appropriation. Okay. So we shall come here and say, now the partnership salaries are less. Okay. So we shall say less partner salaries. So this is Nambozo and Inaku. Hope I've used basically the right names there. So the salaries was 500 and 600. Okay, that is what we basically have. 600 and 500. 600 and 500. This is Naku. 600 and 500. Okay, since this is as a degree of precision, I'll just record 600 and then 500 like that. That is what we basically have. So those have to be less. But I want you to also see something small, even before we proceed. I want us to see something. They tell us that would receive a salary of that respectively effective 1st April 2017. So it means that ideally we should not consider the whole value because they are starting first April 2017. So how many months from here? April, May, June, July, September. That whatever we have here, this salary has to be cascaded down by multiplying it by what? By 9 out of 12, which gets me to 450. Okay, does it get us to 450? And then the next one, when you try to, this is 600. Okay, this is 600, and then the next one, this is 500. I hope that is what is given here. It's 600 and 500. So that is what you basically do. All right, so this is 500,000 times 9 divided by 12. So that gets you to 375. Do you get the same thing there? Let me just try to check this. I want us to. Oh, okay. This is actually a monthly salary. This is a monthly salary. So for the monthly salary, we are not going to apportion like this. If that was the annual salary, then that's how we do apportion. But since it's a monthly salary, this one we shall just multiply directly by 9. Okay. I hope you get the difference. This one we shall just multiply by 9. If it was annual salary, then we would actually do that apportionment. But since they are telling us this is a monthly salary, we'll just multiply it by the 9 months and put it there, which we have done. Okay, so that is what you basically do. You need to make sure that you look out for the facts given by the examiner very well. So that is what we basically have. All right, so that is the first part of our appropriation. Now the next part of our appropriation is to include, there is a comment that the examiner gave when it came to the last statement. There is a last statement here which says that 10% of the net profits before apportionment partners would be retained for acquisition for new plant and machinery. So we have to first get that profit after considering the salaries that we have considered, and then we reserve it, okay, as a retained kind of retained, basically a reserve, because it's going to buy. Remember, reserves are basically money set aside for specific purposes. So it's not basically a retained earning as fast per se, it's a reserve since they have specified what they will be using it for. Okay. So with that in mind, what we shall basically do is come here and this we are listing. This is put a minus. I'll put a minus here as well. So what we are going to get is the profit before allocating it to this. So this will get us 97,309. So then we are now going to less. We're going to less the reserve for new plant and machinery. Okay, so they're telling us that this should be 10%. So you just get this 97 and multiply it by 10%. So this is 10%. Allow me just multiply it by this to determine the 9730. Okay, that is what I'm able to get. And then I'll get what I'll call after this. This is, of course, this is a minus. We are first removing it. So after you less that, you get what will be your profit to be shared. Okay, this is profit to be shared among partners. The profit to be shared among partners will be this minus that, which gets us, it gets us to, no, sorry, since I've already put a negative here, I'll just add them together. Gets me to 87,578. So remember, they told us something when you come to here. They told us how these partners share profits. Up, they told us that these partners share profits in the ratio of 3:2. Okay, so what this means is that Nambozo gets 3 out of 5, and Naku gets 2 out of 5. Remember, you have to first get the total ratio, which is 3 plus 2. And so you, when you translate in fractions, numbers will have 3 out of 5, and this one will have 2 out of 5 multiplied by the profit. Okay. So profit share, I'll have Naku, okay, Nambozo and Naku. So this one has 3 out of 5. And this one has 2 divided by 5. This is times the 87,578.10. Is 87,578.10. So basically, if I want now to get the value, I'll just copy this, bring it here, get it to that, then come here, just change this to here, and get it to this value. Okay, which is 35,031. That is basically what I have. This is how you distribute. Even when you add the two values, you'll be able to come to what? To come to the overall, which is 87,578. So this is the only part that had now the partnership. Okay, this is where the only element of partnership had was included. Okay, so that was as simple as that. Now, the last part of this question asked us for balance sheet, which is very simple that I know all of you can be able to do. Okay, balance sheet. Oh, this one doesn't have a balance sheet. Wow. I think I'll think of another question. So this one didn't have a balance sheet. I think a balance sheet would make it the question even longer. But just in case the examiner asks you to draw a balance sheet, it would be very simple. Just draw it in the same way. Put fixed assets where they're supposed to be, put current assets where they're supposed to be, and equity. And you come to equity, you just put capital. The capital as it is for Nambozo and Naku. And then you put other elements of equity. You put reserves, which you have already put, the reserves for purchase of the fixed asset. And then the next thing that you also do is put any other item there, which I may not really see much because you've already distributed the profits, so on. Okay, yeah. So that is how the question was basically for you. You can be able to get some time and go through this by yourself. And I'd encourage you to also go through those notes that I gave you around on manufacturing, so you can master this topic. The fact that it was brought last year doesn't mean that it cannot be brought this year, okay? And I would encourage you also to try out this question, by the way. If you have some time, get to this question of last year and try it out. Because this time they gave you a cash book and now they want you to do still a manufacturing account. So just try it out. The whole principle here that you need to take into consideration is, just as they gave us a trial balance, remember here in these questions that we have been looking at, I hope that this is the question. Yes. In this question, they have given us here they gave us a trial balance, but the same information, just as they gave us this information of just as they gave us this information of these expenses, when it comes to here, you'd actually get you get the information. What you get in the trial balance, the other side, you get this information from what? From the cash book as it is given here. Okay, this will be like your trial balance, sort of. These with these values as the way they are, the way you also use them in the same way. Okay, and then you're able also to capture the additional information that has been given in terms of allocation. This question I don't seem to see. Okay, this was manufacturing. Did it have? Yes, it had an additional information. I think you can see additional information. It was able to be given. These question marks were also much easier. If they have given you plant and machinery at cost, okay, they have given you the value. This question mark is just asking you, please find the plant and machinery at the end of the financial period. By you just taking into consideration the depreciation, and then you get the new net book value there. The same thing with furniture, and also for this, just like that. Here, already the examiner gave you the distribution of the different percentages. So these were easy. These were easy down here. Just to get this ratio, now the examiner here tried to complicate things for some of my students who are not good at mathematics. But basically what this means, if you have a half here and you have 2/8 here, add the two things and then be able to get what you'll have here. Okay, simple, it's kind of simple mathematics. What I'll basically do is I'll come to my Excel or my calculator. I know I have 1/2. Okay, this one is giving me February. So I have this. I'll have 1 minus. I'm going to now to add. I'm going to add 2. Okay. The other one was 2/8, and then a half. Was it a half? Somebody remind me. This was a half. Yes, it was a half. So what I'm going to basically do is I'll do a half, my half plus 2/8. I'll press that on the calculator. If your calculator can accept such a thing, then I'll just press equal sign. This has worked for me in the dates. I don't want to work in dates. Let me work in this column and see what 1 minus bracket 1/2 minus or plus 2/8, 2/8. Yes, it gives me 2.5. It basically gives you a quarter. Basically, it gives me a quarter, 2.5. Okay, 2.5, 0.25. So your calculator should be able to give you that very same figure. If you want this in fraction, this will be a quarter. Okay, so that will be the principle of how to determine. So if you need to determine how much relates to your what, to your administration, it will be basically a quarter. Just look at it. This 2/8 is actually a quarter. You just reduce it by 1, by 2, by 2, you get a quarter. So a half plus a quarter, you're able to get 3/4. A half plus a quarter, you're able to get 3/4. And 3/4 from 1 gives you a balance of a quarter, which is for this. And you proceed, you're able to distribute your rent, insurance, and all these expenses as they are provided in what? In here. You can see general expenses and so on. They're all provided. So just get this value, see if there's anything in the additional information that you may want to adjust onto it. Maybe it's prepaid or sort of. Then you come and distribute it and find a way of how to allocate it accordingly. The same depreciation, they will either say at cost or reducing balance. The same thing. Okay. They never tell you about carriage costs, where they're telling you that 40% of the carriage costs relate to transporting raw materials, and the remainder relates to transport. Now, the 40% of your carriage costs, you put it under your manufacturing cost statement, just under your purchases of raw materials. The rest of the 60%, you come and put it under your selling and distribution costs. Okay, because one relates to you bringing raw materials, the other one relates to you delivering to customers, which is a selling and distribution cost. As simple as that. This question was very easy, and manufacturing accounts are easy questions to really pass if you know what to really do. They're not complicated. Okay, they're not really complicated. So I would ask you to try out that question if you have some time. Somebody says, do we draw several P&L for parts of the question? I didn't know what you meant with that. I didn't know what you meant with that, but I'm just trying to go into assume something small here. The examiner asked you to do things. Just look at here. They asked you to draw a manufacturing statement, and then they asked you to draw a statement of P&L. The two documents are different. This one was mainly to do what? This was mainly to help you determine your cost of goods fully manufactured. Which value you got here, you transferred it here when you're calculating your cost of sales. So it's not to do that every question we do a P&L. Yes, the manufacturing, this manufacturing what? Statement looks like a P&L in its own because it has materials, it has expenses and so on, but it's not a P&L. The only P&L we have is this. Okay, this is the only P&L. This one, we only draw it to get this cost of goods fully manufactured, which we have gotten here. This is the only reason we draw up this kind of information. That is what we do. So that should be able to guide you accordingly along the way. So thank you so much, guys, and I wish you all the best. Try out as many questions around this area for you to perfect yours, okay? So have the best of the rest of the evening and the morning and everything, okay? Yeah, so thanks so much. Thank you. Glad you've gotten it, okay? Stop.